Welcome back to Friday Flows. I've switched it up a little bit where I was doing Friday Flows on a weekly basis. I'm going to start doing it on a monthly basis now. But what a month it has been in the month of March. Really whiplash with what's going on in the banking sector. Flows have kind of gone back and forth on a weekly basis in big ways. But for the month, it's pretty much even from equities to fixed income. Whereas fixed income was most definitely the play uh, at the start of the month with SVB going down. Within the last couple of weeks, investors have taken that and said we're jumping back into equities. Over this last week, as you can see, fixed income was still more than equities. But whereas we had some weeks where people were actually taking dollars out of investments altogether, we're back on the positive side on the 1 week, even in the 1 day. But over the last month, it's been fairly equal over equities and fixed income if you look at over a monthly basis. But week to week, big moves one way or the other as investors were trying to decide what they wanted to do with the information with the banking sector. Jumping over to the peer groups, what did well over the last month? Fixed income, broad or North American fixed income, took in the most dollars. North American equity, again, that kind of fits with what we just saw from an overall view. But North American fixed income took in a huge numbers over the last month for them. And again, over the last week, they actually led over equities quite a bit. So not something you typically see, but kind of gives you an idea where investors kind of whiplash back and forth this last month, where they pull dollars from. Alternative sector, high yield, Asia Pacific, North American fixed income tips is what this is. So, again, they were pulling from different areas and pushing into fixed income, broad equity, North American fixed income, kind of broad, um, pulling from very sector specific to very broad investments. Over the last week, again, kind of fits that same narrative. Corporate high yield, North American alternative, fixed income tips. People don't know what to do with tips, it seems like this year. Jumping over to the individual names, over the last week, again, people moving into fixed income. Schwab's 5 to 10 year corporate bond, most dollars I've ever seen go into this fund. Again, a big, 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 big move. But other treasury type bonds, 20-year, 7-year, whereas earlier in the month it seemed like investors were moving towards short duration. This week, over this past week, they really moved that duration out to over the 5-year mark, 5 to 10 years. Makes sense to me. The yield curve could be bending that way here shortly, and I think this is kind of people's play on to get an early spot in that as those funds take advantage of those moves. Over the last month, again, quality has been the focus. Let's get high quality companies. Again, this 10-year, 7 to 10 year treasury bond pops up again over the last month. The 5, again, all of that was in the last week. T-bills, treasury bonds, intermediate term treasury. So again, people looking for safety. JEPI in there again over the monthly 1.9 billion. Again, a fund that I own in my portfolios that very happy with as its dividend is fantastic. And lastly, I'm going to jump in over to the Schwab fund. That this is the 5-year, 10-year corporate bond. Again, this fund has been around since 2019. Has never had flows like the last week. So 1.9 billion going in on Monday, March 27th. Yesterday, another 2.61 billion going into this fund. Again, big, big moves as you can go back over the 10-year here. And there's never been moves like this into this fund. So again, big money moving into this sector, moving into this duration. Again, from a standpoint of the yield curve, maybe going back to uninverted, and people want to take advantage of that. So Anyway, so I hope this was helpful. We'll be talking soon, and good luck out there investing.